So hello everyone, welcome to our fifth weekly word speeches, an initiative of the study group AI World. Today we will have two speeches. First, Oksana Tsvar, a polyglot with a master's degree in finance and accounting project management and another in language translation between English and German, will present a speech about AI in financial fraud detection. After that, Farhan Farrukh, a researcher for smart energy technologies at Smart Innovation Norway, will talk about the use of AI product in flexibility for energy systems, a story of FLEXGRID European Project. Let's now begin our presentation. Hello, Oksana, are you ready?
Yes, thank you. I'm ready. Okay, we can start. So hello, everyone. Today you will listen about AI in financial fraud detection. So fraud is a daughter of grid by Jonathan Cash. So let's go further. Psychological reason of financial fraud. People can commit financial crimes for a variety of reasons. In the 50s, Dr. Crissey suggested a theory of fraud triangle, which helps to explain why people do this. Three key elements of the triangle are pressure, acute need for money, opportunity, and rationalization. Pressure means when, for example, managers are expected to achieve better financial results than they did, so they are encouraged to cook the books to artificially correct the results. Opportunity means that to commit fraud, a person must have a chance. It can be created by putting rough estimates in financial statements or inefficient internal control. Rationalization of a crime means a positive or neutral attitude of a person towards fraud. Moral values and character can allow the person to do so. It can be not only greed. People can find themselves in a situation enabling the rationalization of their fraudulent activities. For example, the duty to act in the best interest of the company or support their family. For example, if you don't have money to give food to your children, so you can commit fraud. Yes, not only just to earn a higher wage or to be promoted at your job. There is such a phenomena that is called the rat race. The rat race makes people overstep the allowed line. If we return to managers, the rat race, constant pressure of competitors and pervasive greed for profit make them present good results of their companies, whether there were appropriate conditions for that or not. Executives want to save their jobs. They are expected to achieve operational outcomes even if the company's budget is low, there is a lack of resources and increased market competition. Bad results of the company will disappoint shareholders and investors. The company can lose orders and have difficulties with obtaining bank loans. Therefore, managers feel constant external pressure and manipulate accounting statements to show their company's better situation than in reality. Typology of financial fraud. Banking fraud. There are two main types of banking fraud, external and internal. External fraud is when the perpetrator is outside the bank and no bank employee is involved in the scheme. It can be the outright theft of the ATM or using a debit credit card to defraud a banking establishment. Examples of external fraud include forgery of identity data, fraudulent loans, above all mortgage fraud, and stolen checks. According to another typology, there are employee fraud, institutional fraud, accounting fraud, customer fraud, transactional fraud, and individual fraud. Forgery can happen when a perpetrator changes the name, signature, or other information on a check. It includes adding zeros to the check amount so that $200 turns into $2,000. Fraudulent loans, purposely giving incorrect information on a loan application in order to better qualify for a loan. Especially known about immediate bankruptcy is a fraud. If you apply for a loan and you know that you will be a bankrupt, so you are committing a fraud. A large number of fraudulent applications cause huge bank losses. Stolen checks. Fraudsters stealing checks turn out to be workers of a post office, tax authorities, a corporate payroll company. They have access to mail. Have stolen checks, they open a bank account using a false name and deposit the checks. Now, credit fraud depends on the type of loan product. Mortgage fraud is prevalent, obtaining a mortgage by making false claims on your application, for example, lying about income or employment situation, hiding a bad credit history. The least risky are loans secured by financial assets. Mortgage loans belong to them. Among the less risky are also consumer loans, so-called fast loans. ID fraud is the riskiest when the fraudster presents false identity documentation. It also includes falsification of employment, property, income, assets documentations. Internal fraud forces assistance of a bank employee, also in the case of the deliberate negligence of the employee. Internal fraud is also called inside abuse or occupational fraud. It can take place when a bank worker steals cash or cash equivalents. A subtype is account fraud, when an employee has access to accounts payable temporarily disguised as an interdepartmental transfer, cash in transit, or loans in process. It means that some accounts hang in the air, so an employee can misuse this information. Money laundering implies a financial transaction scheme aimed at concealing the identity, source, and destination of illicitly obtained money. Criminals transform legally obtained gain into seemingly legitimate funds. According to UNODC.org, the estimated amount of money laundered worldwide in 1 year is 2 till 5% of global GDP, or 800 billion till 2 trillion in US dollars. A new class of criminals, lawyers, bankers, accountants, provides laundering services to other criminals. Criminals can freely use laundered money through society, invest in them, and buy articles of luxury. E-banking crimes. E-banking is one of the favorite, most lucrative playgrounds for cybercrime offenders, which constantly adopt new, more sophisticated techniques to stay ahead. The growing number of online and mobile banking users facilitates the illicit creativity. As you can see, two main types of e-banking fraud are when computing machines are a target, and the second, when computing machines are a weapon for cyber criminals. The high-risk threats for banks stay identity theft, e-banking, online banking, and ATM fraud. The key participants of e-banking crime are malicious fraudsters who can be insiders, bank employees, external amateurs, and experienced innovators, copycats, and of course organized criminals. Amateurs are beginners and their expertise is limited to computer skills. Innovators seek to find security holes in the system to overcome protection measures adopted by the bank, and copycats are interested in recreating simple schemes. To realize their plan, criminals use money mules who are paid for their service or don't know about being a mule for transferring illegal stolen money from bank accounts. They can be recruited online as they think for a legitimate job. The third category contains various victims, such as individuals, companies, banks, of course, and what is important, the whole state economy. The most important category is security guardians who improve the existing banking system and remove security vulnerabilities. E-banking criminals can also be classified subject to their motives into the financially motivated attacker, the politically motivated attacker, and the espionage motivated attacker. Examples of e-banking cybercrimes are hacking, identity theft, malicious software, credit card fraud, email fraud, phishing, spoofing, smishing, vishing, farming, whaling. Hacking is when a bank customer's computer is broken into so that their personal information can be accessed by criminals who use a variety of software. The customer may not be aware that his computer is accessed from a remote location. Banks sometimes also use hacking to check their internet security protection. Victims of identity theft become people who use the internet for cash transactions and e-banking. A criminal accesses data about a person's bank account, personal number, credit debit cards, and other sensitive data to siphon money or to purchase online in person's name. It can also spoil the victim's credit history. Fraudsters can also use malicious software to disrupt a network. The software gains access to a system and steals sensitive information or causes damage to software installed in the system. Phishing alludes to the receipt of messages sent to bank customers asking them to enter their password, login, username, or other secret data to access their account for some reason. Customers are directed to click on a link or answer a mail. Never do this, because when you click on the link in the mail and enter the asked information, you will stay unaware of when a fraudster will get the admittance to your bank account balance and the funds contained in that account. Email spoofing means receiving an email that seems to originate from one source when actually sent from another source. It's an attempt to make a user to release sensitive information as passwords or to make a damaging statement. It can be an email from a system administrator requesting users to change their passwords to a specified string under the threat to close their accounts, or mail from a person in authority claiming to send them your password. Phishing or voice phishing. Phishing means voice phishing, is the act of using the phone in an attempt to scam the user into surrendering the private information so that others can access and use your important accounts. A fraudster can pose as a bank representative and call a victim to persuade them to reveal financial information or use their card reader to authorize payments online. Smishing is sending phone text messages to lure consumers in. Such messages can contain an URL or a phone number. I personally have received both. I had a message from a supposedly gas company and had to click on a link to pay some late payments for gas used in a city I had never lived in. Farming happens when a fraudster installs malicious code on a personal computer or server. So when you click on a website, this code redirects clicks to another fraudulent website. You are unaware of it. And whaling at last occurs when high executives, politicians, and celebrities are targeted by fraudsters. On this chart, you can see a fraud scheme. First, a malicious coder writes a malware code to exploit a user's computer vulnerability and installs a virus. Then a hacker retrieves bank credentials from the infected computer and logs into the user's account. The stolen money is transferred to money mules who send the money to the crime organizers. One of the malware usage forms in e-banking is a botnet. It is a group of malware-infected computers called zombies or bots that can be used remotely to carry out attacks against other computer systems. The malicious activities include unauthorized access, credential leaks, data theft, and DDoS attacks, distributed denial of service, or disrupting normal traffic. Here you can see a chart presenting cybercrime top 20 countries. Each country lists 6 contributing factors: the share of malicious computer activity, malicious code rank, spam zombies rank, phishing website hosts rank, bot rank to substantiate its cybercrime ranking. Bank card fraud. is a fraudulent use of a bank's the fraudulent use of a bank user's card number, details, or personal information in order to perform unauthorized transactions from the compromised bank account. Application fraud happens when a person falsifies an application to obtain a new credit card, for example, using an assumed identity. Skimming occurs when the information held on either the magnetic stripe on the back of the credit card or the data stored on the smart chip is copied from one card to another. Fake and doctored cards, doctoring cards means erasing the metallic stripe using a powerful electromagnet and then tamper with the details on the card so they match the details of a valid card that fraudsters have stolen. Credit card generators means using computer software that create valid credit card numbers and expiry dates. The software is very reliable and can be downloaded from the internet. It makes it also available for fraudsters. Tourism fraud. To check if a stolen card is still valid, fraudsters can try to book a hotel reservation to get authorization. They even can check in hotels with a stolen ID and premium credit card and enjoy VIP services. Site cloning is when criminals clone the entire or just several pages of a website from which you place your order. While the user fills in an order form with their name, address, and full card details, he/she is unaware of being scammed. Triangulation happens when a merchant offers a product at very cheap price through a website. He tells a customer to pay via email once the item is delivered. The merchant uses a fraudulent card to buy a product from a website and sends the product to the consumer. In turn, the consumer sends the merchant his/her credit card details via email. For a short period of time, the merchant uses the received credit card numbers to buy products as a legitimate merchant before closes this website and starts a new one. Insurance fraud types. Insurance fraud can be committed by a policyholder or by a third party claiming against an insurance policy. The participants of the fraud may be opportunists with fictitious injuries or organized crime rings. The main insurance fraud types include forging documents, claims, invoices of repair, for example, insurance application filled with false information. Inflating loss, for example, following a burglary, the homeowner adds items to the list of stolen property that isn't missing. Providing incomplete and untrue information on the circumstances of the event to obtain higher compensation payment. For example, a person who slips and falls in a restaurant exaggerates the injury in order to obtain money from the restaurant's insurance company. Sending the same claim to several insurance establishments, for example, for the same vehicle. Backdating policies when a car owner includes previous damage to the car after an accident, so insurance will cover the repair. Inflating repair costs by garages. Staging a motor accident involving several previously damaged vehicles. Reporting an imported damaged vehicle, what is a fake event. Reporting fictitious theft of a vehicle or its parts. Causing a collision intentionally. Here you can see the interaction happening in the case of insurance fraud. The main actors are the fraud crook, who delivers false information, and the victim, a deceived insurance company that suffers a loss. Tax fraud. The main types of tax fraud are value-added tax fraud and income tax fraud. Tens of billions of undeclared and untaxed euros are placed outside the EU's borders. As a result, national tax revenue is diminished. The main forms of value-added tax fraud present invoices with fictitious transactions, used to reduce their VAT liabilities or to reclaim the VAT. Declaration of an intra-community delivery when goods in fact remain in the domestic market and no VAT liabilities are paid. A purchaser does not pay VAT in the country of destination. According to Richard Murphy's estimation, global tax evasion amounts to 5% of the global economy. I haven't told you about accounting fraud. Okay, I can do it so short. The scope of accounting manipulation comprises preparing fictitious invoices, what is a common phenomenon harmful to the economy. VAT fraud and income tax fraud can be committed in this way. Fictitious revenue recognition in the books, accounting books, for example, sales revenue, unreasonable revenue increase for services that will be rendered in the future, for one-off sales for goods which prices cannot be verified on the market. Creating artificial reserves in income is transferred to later periods. Non-recognition of some obligations, for example, conditional obligations. Incorrect recognition of costs of future period depreciation, they are called, for example, are recorded present costs or current costs are charged for future revenues. And on this slide, with a chart, you can see estimated tax evasion costs in EU countries in billions euros. The 10 top countries are Italy, Germany, France, UK, Spain, Poland, Belgium, Netherlands, Greece, Denmark. The lowest tax evasion costs characterize Estonia and Malta. Obtaining money under false pretense. It foresees deception for the purpose of obtaining money, assets, securities, real estate, etc. A fraudster can impersonate a relative, somebody's relative, bank info-line worker, debt collector, policeman, lawyer, special agent, investor, for example, investor in bitcoins. Advance fee fraud is an upfront payment by a victim to a fraudster. Main categories of advanced fee fraud include people who need a credit loan for them or their business but have difficulties in obtaining it somewhere. People who are persuaded if they join the suggested business deal, they can expect big profits. This financial transaction is always bogus, and the victim never receives the credit nor makes the promised profit. The beast uses the sense of fear and urgency to make their scheme work. AI, ML in detecting financial fraud, ML supervised learning. Advanced AI ML systems can not only find anomalies in financial cases, but recognize patterns that signal fraud schemes. Two types of ML, machine learning, are used in fraud detection algorithms, supervised and unsupervised machine learning. Supervised learning, the goal of the AI model's training is to predict selected variables. The model is trained on historical financial data that are labeled. The data sets have already the target variables marked. Unsupervised learning. In turn, the goal of unsupervised learning is to uncover hidden relations between variables in data items. AI model processes unlabeled data to classify them into various clusters. Let's see how the two methods can be combined to create solid anti-fraud systems. First, data should be labeled. For it, we use unsupervised learning model to segment data into clusters reflecting hidden relations. Then, labeling is more precise because the data set is labeled into fraud, non-fraud items, and nuances which indicate different fraud types are covered. Next, we train the supervised learning model on this new labeled data set. This AI model will be productionized, for example, suspicious transactions detection. For more accurate predictions, we can combine multiple different models. When we use one model, it can recognize some patterns but miss the others. Combined models analyze the same transaction and vote to make a consensus judgment. Thus, we can use the strengths of multiple models to make accurate and precise predictions. When ensemble models, it is good to set up verification in two steps. The first step is express quick verification, when all transactions are divided into legitimate and suspicious ones. The former are approved by the system. The latter go through step 2, advanced verification by the combined model system. The main objective of financial fraud detection is to maximize correct predictions and maintain incorrect predictions at an acceptable level. The key concept in fraud detection is that fraud may be detected by noticing significant deviation from the normal behavior of people. It is needed to identify fraud as quickly as possible. Companies lose on average 5% of revenues because of fraud a year. Insufficient fraud detectability has a bad influence on the global economy, as dampens the trust of customers, investors, and society in the financial sector. Three basic factors in fraud detection using AI: false positive rate, false alarm rate, the percent of legitimate transactions that are incorrectly identified as fraudulent, false negative rate, the percent of fraudulent transactions that are incorrectly identified as legitimate, detection accuracy rate, true positive rate, the percent of fraudulent transactions correctly identified as fraudulent. Consequently, the typical fraud detection techniques attempt to maximize the detection accuracy rate and minimize false positive rate. Rule-based fraud detection gets outdated. The same rules are applied for analyzing every fraud case, though they differ greatly. You can see the difference between rule-based and machine learning-based detection systems. Rule-based fraud detection means catching obvious fraudulent scenarios, requires much manual work to enumerate all possible detection rules, multiple verification steps that harm user experience, and long-term processing. Instead, ML-based fraud detection means finding hidden and implicit correlations in data, automatic detection of possible fraud scenarios, the reduced number of verification measures, and real-time processing. ML algorithms are able to process huge data sets with many variables and detect hidden correlations between users' behavior and the likelihood of fraud. When compared to a rule-based fraud detection system, ML requires less manual work and processes data faster. According to Oliver Wyman, a consulting firm, the edge-cutting AI and ML solutions combining supervised and unsupervised learning can calculate weighted scores for any digital activities in milliseconds, what can challenge any new sophisticated fraud. These modern AI engines can also review up to decades of transaction data in a 250 millisecond response rate in order to calculate risk scores. In addition, their scores are 200% more predictive. Detection systems can learn, adapt, and uncover emergent patterns of financial crimes that can help prevent losses. Unlike rule-based systems, machine learning adapts to changing behavior in a population. Machine learning is a natural fit for automating manual and iterative processes such as uncovering financial crimes and reducing the cost of compliance. ML facilitates fraud alerts, enrichment, and boosts suspicious activity reports, SAR, conversion rate. AI systems detect rare events in real time using historical financial data, for example, card holder data. They reduce false positives, detecting more digital payments fraud at the same time. By adding Insights from text analytics using unsupervised learning to find what you don't know. Through unsupervised learning, a model can analyze large data and recognize abnormal things. What is better for the good reputation of the institution? According to Accenture, AI should be prioritized in the following cases: detection and following suspicious behavior with advanced analytics and ML. Discover new money laundering typologies through network analysis. Prioritizing of investigations using machine learning. Improvement of operational efficiency through predictive analytics. Creation of explainable and reasonable AI ML models. Pay attention that the AI ML models should be explainable because it's for demand of regulators and investors, for example. So they should understand how the models work and what they predict. Okay. How to use AI for detecting fraud? Detect and focus on suspicious behavior with advanced analytics and ML to identify anomalies that include non-compliance. Learn to identify new indicators and patterns of behavior linked to money laundering or other suspicious behavior. Discover new money laundering typologies through network analysis to understand the complex relations across networks of transactions and behaviors, relations between risky entities or rings of criminals. Prioritize investigations using machine learning to analyze customers' transactions and identify the most likely suspicious transactions for investigations. Improve operational efficiency through predictive analytics to analyze historical investigation and case information. Create explainable and responsible AI ML models to better crime detection. AI models have to be explainable for regulatory and management needs, taking into consideration the ethical implications of AI. What to verify? You can see in this picture, what elements you should pay attention when you verify different information, transactions, and trying to detect some fraud patterns. So, for example, address verification service, card verification value, unique electronic device identification, limiting large transactions, payer authentication, high-risk countries, lookout mechanisms, risk scoring tools, high-risk countries and people. Yes, in the USA, they have a special list, watch list of people who are banned in different countries. I don't remember exactly how, but there is a special list where such people are enumerated as different politicians and so on. Okay. Artificial intelligence can also be applied in auditing to find and analyze patterns and behaviors in the client's data. AI is helpful in reading unstructured data, as emails and phone conversations can reveal important anomalies not captured by the firm's accounting system. AI could do structured and partially semi-structured tasks of auditors, up to 80% tasks. AI model that detects fraudulent activity in real time instead of flagging it as fraud or non-fraud. The system assigns each transaction a probability of being fraudulent. There is a defined risk threshold. When a transaction is over this threshold, it gets rejected at the point of sale. What concerns ML, machine learning, the algorithm can recognize when a cardholder was using its bank card in Oslo, then had used the same card several hours before in New York. This is a suspicious activity because a consumer could not fly from New York to Oslo in several hours. In this case, machine learning recognizes a sudden change in pattern and flags the transaction as fraud. It can use the following information: cardholder behavior, purchase date, device, stored cookies, IP address, buying history, etc. In turn, the same models could be applied in accounting to check vendor payments for accuracy, analyzing vendor payment history, their location, and credit trustworthiness. AI can use the following structured data to predict possible fraudulent activities. The invoice in doc format. If you see the invoice, if an invoice in doc format, it causes some suspicions, doubts, No tax details on an invoice. Invoice contains spelling and grammar mistakes. Incorrect or invalid dates, for example, 31st of February 2021. Taxes incorrectly calculated. It can also be suspicious on an invoice. A too short and an insufficient description of goods or services invoiced. For example, services goods as requested. And now more description. The company name on the invoice is not registered. No physical address on the invoice, postal code or phone number does not exist. Algorithms. I will give examples of several algorithms used for fraud detection. Random forest, support vector machine, k-nearest neighbors, neural networks, and deep neural networks. All of them belong to supervised learning and can compose more complex ensembles. Random forest is an algorithm which builds a group of decision trees to classify data objects. The model performs and iterates splitting records multiple times with the help of the selected variable. The visualized algorithm has an image of a tree. Multiple decision trees are trained on random subsets from a general dataset for more precise predictions. All the trees decide if a transaction is a fraud, voting, and provided a consensus judgment. Random forest is mainly used for detecting fraud in payment systems. It is relatively simple and fast and is characterized by precise predictors even when a data set misses several records. It can be used with such data as dates, credit card numbers, postcodes, IP addresses, etc. Support vector machine is used to classify data in a dataset with the help of a non-probabilistic binary linear classifier. First, the classifier splits the data into two sections with a clear gap. Thus, several hyperplanes appear in the multi-dimensional space. The algorithm selects that hyperplane that separates data better than the others. Support vector machine shows the best detecting results of card transactions fraud detection when data sets are complex and multidimensional. K-nearest neighbors classifies records based on similarity depending on distance in multidimensional space. A record is assigned to a cluster of the nearest neighbors. Each record votes for assigning a new record. This algorithm also suits card fraud detection. Its benefit is insensitivity to missing and noisy records. It is characterized by high accuracy. Neural networks is a model that works similar to the human brain neurons. It allows determining nonlinear relations between records. The model is built of several layers, mathematical functions, including 2 hidden layers. It is trained on a data set of labeled data, input data that pass through the layers. In turn, deep neural networks is a model which employs much more layers than usual neural networks. It requires more time for processing data and more computing power, but provides more accurate results. Autoencoder is a kind of neural networks that consists of encoder, latent space, that is code, and decoder. Its task is to replicate input into output. Encoder and decoder are connected feed-forward artificial neural networks. In turn, the code consists of a layer of A and N of optional dimensionality. Before training the autoencoder, we define the number of nodes in the single layer, so-called hyperparameter. Autoencoder belongs to unsupervised learning. It does not need a labeled dataset. We train autoencoder on a financial dataset that consists of accounting journal entries. The compressed input data become replicated into code. As a result, the coder reconstructs normal journal entries. On the contrary, when the coder comes across deviations from the norm and anomalies, it yields a high reconstruction error. Thus, a business is warned of possible fraud attempts. You can find the code of autoencoder under the GitHub link on the top of the slide. On the bottom of the slide. Autoencoders are characterized by high success rate of fraud detection. They can comb through the whole accounting journal looking for anomalies. They can become incorporated into the internal control process of a company. At last, here I have prepared for you some data sets in financial fraud detection. So you could just look at them. Okay, you will get the sites in AI Vault group, so you can then research these links more thoroughly later. Now we'll go on to benefits of AI and ML technologies fight against the growing fraud threat. So among the benefits are accurate data analysis, improved qualities of alerts, reduction in overall alerts volume, early detection of fraud attack, reduced false positives, what facilitates better customer experience, better detection of complex fraud, greater ability to filter our fraudulent activity. AI stops nuanced abuse attacks, increased risk data collection and presentation for investigation. AI systems free fraud analysts. I mean that AI systems, usage of AI systems, frees fraud analysts for be occupied with more complex investigations instead of waste time on simple cases that can turn out to be not fraud. Increased global compliance and reduced risk, automated handling of simple fraud cases, improved data quality and acquisition approaches for know your customer, enhanced customer experience due to less false positives and faster transaction approval, what also makes the customers like a bank more. Improved sales, risk scores accessible at real time, achieve regulatory compliance. Higher visibility of fraud exposure across channels, across the company, minimize fraudulent losses, maximize cost savings, improved customer retention, protection for customers' brand, improve accuracy by reducing manual processes, keep pace with clever criminals, advanced reporting and data use. On the next slide, you can see some examples of companies and banks using AI ML for fraud detection. MasterCard, for example, uses AI to protect its clients from financial fraud. Each transaction is assigned a score that is later used to judge future payments. Using machine learning, the model can more accurately predict a transaction based on previous payments, decreasing the number of false positives, false declines of transactions. A great number of false positives cause damage to customer service. People get irritated when their transactions are declined and abandon their credit cards. Also, other companies such as Forter, Sift, Signifit, Fidzai, Ravelin, Smite, Risky Field, Stripe, Radar use AI and ML to detect financial fraud. A fintech company Fidai states a fine-tuned machine learning solution detects up to 95% of all fraud and minimizes the cost of manual reconciliations, which accounts for 25% of fraud expenditures. Capgemini states that fraud detection systems using machine learning and analytics minimize fraud investigation time by 70% and improve detection accuracy by 90%. IT Finance has implemented AI biometric technology and uses behavioral data to estimate fraudulent cases, calculating how a person touches the screen, swipes, and types. So here I have also placed the resources I have used for the research. So it's all for today. So I thank you for your attention. And if you have some questions, I would try to answer them. So thank you.
Thank you, Oksana. Unfortunately, we are running short on time, so we are not having questions now. If anyone has any question, please put them on our study group on Slack, okay?
Okay, it's okay. So I will look at them and try to answer.
Thank you, Oksana. Thank you for for understanding.
You're welcome. It was a pleasure.
Thank you, Oksana. So now let's hear from Farhan Farrukh and his presentation about the use of AI product in flexibility for energy systems, the story of FLEXGRID European Project. Are you ready, Farhan?
Yes, I'm
Yeah,
here.
yeah,
Thank
yes.
Hello?
you. Hello.
Oksana,
Uh,
you need to stop
To
share.
close my okay.
Thank you, thank you, thank you.
yes, I think now you can see my screen.
Yes, we can, Farhan.
Yes, thank you very much. Thank you, everyone, and thank you, Oksana, for a very detailed presentation. I think it was quite a number of definitely key learning points. So I am not, I would say, as detailed today as Oksana was, but I will try to keep it something that is of interest or a bit on the lighter mood on a Sunday. First of all, thank you very much for inviting to everyone who was here today. My name is Farhan Farrukh. I'm a researcher for smart energy technologies at Smart Innovation Norway. So with the Norway, you can understand I'm currently based in the city of Halden in Norway. It's around 1.5 hours from Oslo towards Sweden. And my daily task here in this organization is to coordinate European research and innovation projects. I'm working currently on many different European projects. I have a background in energy engineering, so I have a double master's, one in energy engineering from KU Leuven from Belgium, and also I have another master's in electrical engineering, particularly in smart grids and smart buildings, from France, from Polytechnique de Grenoble. So I've been living around the world, and I'm originally from Pakistan. So I graduated as a bachelor's in electrical power engineering from University of Engineering and Technology Lahore, UET Lahore. I think many of the people from Pakistan recognize that name. So I've been living across different countries for the past many years, and one thing that is in common wherever we go now, where we connect, is how to make a world more sustainable. So that's kind of the passion that brought me to Europe, and then I started to basically study sustainable energy. And energy in general, where I talk about, is mostly renewable energy and trying to find out, clean sources of energy. That is very important. And nowadays, I know it's a very diverse audience, so I would just keep it very easier for everyone to understand. Flexibility is a very key topic in the European energy space, or in the world actually now. What does it mean? Flexibility is like having a flexible schedule. I can go out to meet someone today, or I cannot because I have a lot of work. That's called flexible, right? Being flexible. Similarly, when it comes to energy, it's a similar kind of concept. So energy flexibility means I can turn on my stove at any time of the day. I can turn on my washing machine any time of the day because I'm flexible. I can, but or if someone says no, I have to turn on at this particular hour of the day because I want to reduce my electricity bill or want to, just be more comfortable in my home. then that's being a little less flexible. So this flexibility in the energy domain is very important now with the renewable energy sources, and now with this, we hear a lot about this wind energy, with the solar energy, and now with batteries, electric cars in Norway. It's a big thing now. It's almost every other car being sold is an electric car. So how can we use all these energy sources in a more flexible way? So that kind of corresponds to what we are going to talk about today in this presentation, and that is on the project called FLEXGRID. FLEXGRID is a European Horizon 2020 project. Horizon is a big framework of European Commission. It funds mostly topics that are really advanced in research and innovation, which basically brings a lot of solutions and make the European continent better in certain topics that is being evaluated here. And FlexGrid was funded by the European Commission under this framework with the grant of Horizon 2020. FlexGrid is a project, as I told you. It's looking at across many different stakeholders. So it has a wide variety of partners across Europe. So it has a really universities from universities of Cyprus, from the university in Greece. Then we have the Danish Technical University from DTU in Denmark, Copenhagen. It's research organizations like Smart Innovation Norway, where I come from, but also Austrian Institute of Technology, AIT. It's an Austria-based energy research institute. But then it's also a combination about market and commercial actors. So we have players like Benetze, which is a distribution system operator, meaning the guys who put cables, who put transformers, who put these electrical cables underground or on the street in order to make sure electricity comes to our house. So those are called DSOs. So we have a DSO in the consortium. Then we also have a transmission company, which is called a TSO. It's like a bigger brother of the DSO, which manages big transmission lines. Probably in every country you have seen on highways these big towers. These guys are basically managing this dams and then transferring all this electricity with those cables. So we have those, and then in Europe it's a interesting case. We have market that basically where you buy and sell energy. So that is called a market operator, and in that case, Nord Pool is a Nordic Scandinavian market operator, and then also we have other entities. So this project is funded for 3 years. It's almost 4 million euros project in funding. So it's being coordinated by our partners from Cyprus, ICCS, and then it looks at many different, as I told you, aspects of energy flexibility. So just to explain again what I was talking about, why is it important today, flexibility? So on the right side, you see these new devices coming, right? We all live in technology. We have mobile phones, we have laptops. These are small batteries in these devices, but now we are having these big batteries in our houses. We call it Tesla Powerwall. You have seen in cool YouTube videos, or you have seen electric cars like Tesla's Model 3 or Volkswagen's electric cars and all these new cars that are coming. But then also on the other side, you see in our houses, we use a lot of electricity. We use now electricity for our television, for our washing machines, and God knows how many other things, right? So electricity is becoming a major player in our everyday life. Back in the day, it was not the case, but now it's almost in everything that we use. On the other side, these are the grid operators. These guys that maintains this electricity infrastructure, and they are quite these days a bit troubled, because some days you have sun in the sky, but some days you don't have that much sun. Some days the wind is blowing and it's not blowing. So electricity being generated and the way it's being used is very different now. And that is why they want to keep that network, that the system they have, always stable meaning supply matching the demand at every second. That's the purpose of electricity. Back in the day, with the Nikola Tesla, all the debate and all the fun stuff that we heard about in our lives growing up, this electricity always needs to be balanced, and that is why these guys are willing to pay some amount to these people like us living at our houses and using all these electricity devices in order to keep their system stable always, supply matching demand. And this they cannot directly do. They cannot directly talk to million of customers at the same point and say, okay, you talk to me, you talk to me. It's not easy. So you needed ICT tools, you needed technology, IT, right? And that's where the software part comes in, and that's where we are talking today about AI and everything, right? So that's where the software technologies comes in, and then it comes in with these new players, energy service providers, or these local flexibility marketplaces. This is the place where all the players can interact. So you can call it like one big computer, a big computer machine that all the players can talk about, and then everything is handled in this big computer. We can call it a software. Basically, it is a big software platform. Then these players have to develop intelligent tools, and this is where it gets interesting, where they need to develop tools using AI, machine learning, or deep learning algorithms in order to make sure that they have a really good mechanism on this side, what is on the right side, to manage it and offer it to these guys, and then make money in the process that is going on. So what this project is basically looking at is to develop this one big software application. It's called Automated Trading Platform. It's a complete platform which has many different software applications into it, and then it has many different algorithms. But some of the algorithms are designed by basic mathematical principles and research, but some of them are designed based on advanced machine learning and deep learning, techniques. And I will just quickly highlight later on, because we don't have a lot of time today to go into deep detail, and I'm also not an expert in AI. Like I cannot talk about exactly mathematical way of these things are being developed. But as I told you, it's a big project. It has so many different partners, and then different partners have different strategies. So some universities are working on one of these applications that you see below, and some are working together on another one. And then all of this are put together in a one big platform called Automated Trading Platform. And then it's being basically, it's a service which will connect to existing actors in the market. So we all are learning in this AI course that, if there is a business problem that you are solving, then the AI makes sense, right? That's the first course we took. So all of this platform needs to serve these business actors. And that is where my role is coming with my partner at Smart Innovation Norway. We look at each business objective of these players, try to find what is the business objective, try to find what kind of cool algorithms, which kind of machine learning and AI techniques they are doing, why they are better than what is there currently. And then we basically quote these guys, okay, this much this gonna cost, and let's make a business out of it. So that's in a very simple sense, I'm trying to explain what I do on everyday basis. So I will just quickly go through the last few slides where what are the different services, as I showed you, is being developed. So flexibility market operator, I told you this is one neutral entity in between this one big machine that will take all the bids of the supply side and the demand side, and they are called flexibility market operator, and they are getting different tools from this project. Where FMCT, the frequency, the flexibility market clearing tool, which is using basically machine learning techniques, and then it basically classifies how to best clear the market. Clearing the market means that you have at a 3 o'clock you say, okay, I want to sell this much flexibility, for example, and another entity, a distribution, this DSO guy say, okay, at this entity, at this hour, I'm gonna buy this much flexibility. Then how this sell and buy for millions of different customers can be done on an automated trading platform. Then you need a lot of forecasting techniques and a lot of forecast on how the market will clear, which methods will be used and how it will be cleared. So in that way, machine learning techniques are being used there to develop this toolkit and this product. Another interesting thing is the automated flexibility aggregation toolkit, which is basically, I told you, these new actors, the energy service providers or aggregators, which are making business by connecting all of us like end users, our electric cars, our washing machines, everything in their system. Then they make an interesting analysis on how they can maximize their own profit based on what they have seen in our portfolio, and then they bid in this again in this market place. And with this they basically sell some flexibility, get some money, and then distribute money by taking their share to like end users like us, which actual assets they are using. So we in the end even don't know that our car is being used in an energy bigger space, but maybe it's just plugged in, or our washing machine is being just turned off at certain time and it's not being used. But then the overall bigger picture is that it's being helping to stabilize the grid, so supply matching the demand all the time. And they are using some I think neural network techniques to in order to maximize their profit. So they are forecasting, or not just forecasting, I think they're also developing strategies, the best schedules based on deep learning, deep neural network training, to make sure that they have a maximum profit at the end of the day, so they don't lose much money there. And lastly, there is also, it's very common now, a very good practice in energy is the forecasting. So AI is used a lot now these days for forecasting weather, but also in energy sector, they are using to forecast, okay, how much sun will be there, so how much generation will be there from one asset or the other, so how much market prices will be changed, and all those. And for the market prices, I myself worked a bit on a project where I used a Python-based script to basically forecast a day ahead prices. So we used a lot of training data for last 3 to 4 years from the Belgium energy market. So we trained our algorithm basically, or our neural network based on that data, and then we use a training set for the 6 months of that year to basically test the neural network and its accuracy, and then we actually predicted the day ahead forecast, and then it was, I think, the mean square error method to check, which is the best of the forecasting developed. So it's a very common AI product. So this is my last slide. I will just quickly wrap up. I know it's a Sunday, so you guys also wanted to enjoy and take rest, myself as well. But I just wanted to leave you guys with some interesting facts that you can look at more. Look into energy sector. It has a lot of business applications, because I'm really reiterating why business value is important, because the course that we're taking also is emphasizing, if we don't develop good business KPIs, we don't say, okay, AI has a business value, then it's just another algorithm. It's just a new mathematical way of putting something together that nobody wants to buy. If nobody wants to buy, then basically all the time put to develop that thing was in waste. So this we all have to think as the future AI product managers, I hope. So we have to think on how this will maximize the profits for the business sectors, and how we can, in the end, help our planet by making these sustainable products that help us, make better forecasts, or make better strategies, make new kind of AI products that in the end promotes clean energy in our countries, or wherever we live in our societies. And then always make sure that we together have a vision of creating efficiency in the overall industry. So if someone is making profits, the other one is not making losses. So it should always be a good a matchmake for all the entities. So that was all from my side. It's a short presentation. As I told you, I didn't want you to dive into too much details today, but I would welcome you to please go to our FLEXGRID project website, and also follow it on LinkedIn, Twitter, and also all the other social media channels, because this project is right now building up. So there will be a lot of public knowledge being shared, and there are a lot of interesting universities that you can do collaborative project, or you can even find, I don't know, future jobs, or future PhD positions, or whatever your career ambitions are there. So I look forward to maybe a few questions if you have, or if not, then
Well, thank you, Farhan. If unfortunately we aren't unable to have a Q&A on this format as we usually have, so we're gonna move the Q&A to our Slack channel, SG_AI_world. Unfortunately, we're running short of time today. So thank you, Farhan and Oksana, and everyone for being here today. We will be back next Sunday at the same time with 2 more exciting speeches about this amazing subject we are all studying. And I am Suzanne, and I wish you all a happy Sunday and a happy learning. See you next week.
bye-bye.
Bye-bye.
Bye. Thank you very much.
Bye. Thank you.